I want to quickly talk to you about how to open a business for tax purposes. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous, if you were to ask me. If you are doing as great as I am, go grab a cup of coffee or tea or vodka, LS roll. In today's conversation, I want to talk to you about how to start a business for tax purposes. Now, don't get me wrong. I'm not showing you here in this show how to dodge taxes, how to avoid paying taxes by creating a shell company. No. The whole idea here is to actually do things the legit way, do things legally. And so if you have a passion, if you have an entrepreneurial inkling, if you have some kind of talent and you want to have a side business, now is the time to do it. In the digital era, it's never been easier to start a business on the side, whether as a freelance social media consultant, mobile game developer, an Etsy shop owner, or an eBay seller. So let's say you started a business and it didn't make any money. That might be bad news for your wallet, but could potentially help you when it comes to taxes, because the IRS will let you write off the loss from a business on your personal tax return. For example, let's say you have a regular day job. You can use the loss from a side business to offset your W-2 or other income and thus lower your overall tax liability for the year, again, in a very legal way. So does this mean you should go through the effort of creating a business just so you can take, say, 10 grand or 20 grand from your personal savings? Probably not. And does that mean you can get away with creating a shell of a company just to get a deduction? No. Okay, very important. So if you have a side business or are toying with the idea, here is what you need to do in order to properly record a loss. The first thing you have to say, you need to actually, the first thing I want to say here, you need to pick a business structure. So you have a choice. You can be a sole proprietorship, you can be an LLC, a single member LLC, an S corporation, or a C corporation. But so what I want to say is that the business structure, the type of structure you choose, has no impact on whether or not you can deduct losses on your tax returns. So whether you are a sole proprietorship or LLC or S corp or a C corp, you can still deduct losses on your business tax returns. It's just important to understand that it's better to have an LLC. LLC stands for Limited Liability Company. Why? Because you with an LLC you can actually separate your personal finances from your business finances. You don't want your personal savings and main salary, for that matter, to be on the hook should something happen with the side business, right? In addition, if you are starting the business with a partner or two, be aware that the S corporation structure doesn't give you any flexibility in how you take your losses. Each owner must take a loss or gain on his or her personal income tax proportional to how much of the business he or she owns. So if you want any flexibility in how you allocate the losses, the LLC is a better choice in business structure. So speaking about LLCs, let's just dig a little deeper here. What LLC stands for, Limited Liability Company. All right. So, and an LLC can have one or many members. Members is the official term for the LLC owners, and members can be individuals or other businesses. And the cool thing here is that there is no limit to the number of members an LLC can have. So with an LLC structure, members' personal assets are protected from the business's creditors. Let's talk about the pros and cons here in terms of the LLC. So the pros. You have limited liability, so members are not personally liable for actions of the company. That means that the members' personal assets, homes, cars, bank account, investments, are protected from creditors seeking to collect from the business. And this protection remains in place so long as you run your business on the up and up and keep business and personal financials separate. You also have pass-through federal taxation on profits. So an LLC is a pass-through entity unless it opts otherwise. meaning that its profits go directly to its members without being taxed by the government on the company level. Instead, they are taxed on members' federal income tax returns. And this makes filing taxes easier than if your business were taxed on the corporate level. And if your business loses money, you and other members can shoulder the hit on your returns and lower your tax burdens. You also have management flexibility with the LLCs. You have an LLC can opt to be managed by its members, which basically allows all owners to share in the business's day-to-day decision making, or by managers who can be either members or outsiders. This is kind of helpful if you really think about it, because if members are not experienced in running a business and they want to hire people who are, they could do so, right? In many states, an LLC is actually member managed by default unless explicitly stated otherwise in filings with the Secretary of State or the equivalent agency. With an LLC, you also have an easy startup and upkeep process. So initial paperwork and fees for an LLC are relatively light, though there is a wide variation in what states charge in fees and taxes. Let me give you an example. Arizona's filing fees for articles of organization is $50, while the fee in Illinois is, guess what, $500. Okay, so but this variations aside, the process is simple enough for owners to handle the process without special expertise, though it's always a great idea to consult a lawyer or an accountant for help. And ongoing requirements usually come on an annual basis. So those are the pros of an LLC. What about the cons? Before registering your business as an LLC, you want to consider this possible drawbacks. So you have limited liability that has limits, because in a court proceeding, a judge can rule that your LLC structure does not protect your personal assets. And this action is called piercing the corporate veil, and you can be a risk for it if, for example, you don't clearly separate business transactions from personal, or if you've been shown to have run the business fraudulently in ways that resulted in losses for others. You also have self-employment tax as another drawback. By default, the IRS considers LLCs the same as partnerships for tax purposes, unless members opt to be taxed as a corporation. So if your LLC is taxed as a partnership, the government considers members who work for the business to be self-employed. This means what? That those members are personally responsible for paying Social Security and Medicare taxes, which are collectively known as self-employment tax and based on the business's total earnings. On the other hand, if your LLC files forms with the IRS to be taxed as an S corporation, you and other owners who work for the company pay Social Security and Medicare taxes only on actual compensation, not the whole of the company's pre-tax profits. You also have to think about the consequence of member turnover. So in many states, if a member leaves the company, goes bankrupt, or dies, the LLC must be dissolved, and the remaining members are responsible for all remaining legal and financial obligations necessary to terminate the business. So these members can still do business, of course, but they will just have to start a whole new LLC from scratch. So now let's talk about how to start your LLC. First, you want to choose a name. Then you want to choose a registered agent. Okay, and then you need to file articles of organization. Then you need to get an employer identification number. You need to draw up something called an operating agreement. And then you need to establish a business checking account and a business credit card and all the other elements that will distinguish your business, your LLC, from your personal finances. Let's get into some details here. Choose a name. You want to register a unique name in the state where you plan to do business. To make sure someone else doesn't have your business name, you want to do a thorough research of online directories, county clerks' offices, and the Secretary of State's website in your state, and any others in which you plan to do business. So for a fee, many states let applicants reserve an LLC name for a set period of time before filing articles of organization. You need to choose a registered agent. This is actually the person you designate to receive all official correspondence for the LLC. It's crucial that you nail down who this person will be before filing articles of organization, because generally, states require you to list a registered agent's name and address on the form. Though people within the company are usually allowed to serve in this role, states maintain a list of third-party companies that perform registered agent services. You need to file articles of organization. This is the step that essentially brings your LLC into existence. All right, and states request basic pieces of information about your business, which, if you have thought it through your business plan and structure, should not be hard to provide. Really, you'll be asked to supply things like details about your name, principal place of business, and management type. You need to get an EIN. So the IRS requires any business that has employees or operates as a corporation or partnership to have an EIN, an employer identification number, and this is actually a 9-digit number that is assigned to businesses for tax purposes. And the rule applies to LLCs because, as creations of tax laws, they are classified for federal tax purposes as either a corporation or a partnership. You need to draw up an operating agreement. This is really where you want to include specific information about your management structure, including an ownership breakdown, member voting rights, powers and duties of members and managers, and how profits and losses are distributed. And depending on the states, you can have either a written or oral agreement. And many states don't require one, but they're useful to have. And you just think about a business credit card and debit cards and checking accounts and so on and so forth. This is kind of important, folks, because you want to mitigate any potential risk to your personal asset if a lawsuit calls into question your business practices. All right, so folks, that was number one. So if you want to open a business for tax purposes, the first step is to pick a business structure. Number two, you need to show that you are serious. You need to help make your case to the IRS that your side business is more significant than a hobby. This is very important. For example, you need to write up a business plan and keep it current. Anything you can do to show the authorities that you are serious and that this is not a gig, this is not a passion you do on the side, that's fantastic. You want to keep detailed financial records for all income and expenses related to the business. And I mean, this is a must anyway, not just for the IRS when they audit you, but if you want to get a loan or you want to get a business credit card or you just want to get some equity investment into the company, it's kind of cool to have a stellar record keeping. You also need to get business accounting software such as QuickBooks Online or Xero or Wave, depending on the size and structure of your operation. You want to open a separate bank account for your business. I already spoke about that. In addition, you should be able to show that you are devoting substantial time and effort to the business. I'll go through that later on, but this is very important. If you want your side gig to be treated as a business, you got to devote some time to it. So number two, show that you're serious. Number three, you want to demonstrate a profit motive. So if you like attending industry events or talking to other business partners or taking your friends out to dinner and expensing the cost, that alone will not qualify as a business. Not at all. The IRS requires that you start a business with the intention of making a profit. The profit motive is very important. More specifically, if an activity makes a profit 3 years out of every 5, the IRS will presume you are in business to make a profit. The criteria is 2 years out of 7 if you are involved in horse breeding. That's the only exception that the IRS has right now. And I want you to keep in mind, though, that the IRS uses subjective standards to determine whether something qualifies as profit motive. I'll go through that. I'll go in detail after the break. And one thing I want to say here is that there are legitimate businesses that incur losses for many years in a row, right? That's a given. But this is something you want to discuss with a tax advisor to make sure that everything is legit and everything is clear, and that should your business be audited, you're able to substantiate all the elements in your financials. Don't go anywhere. I'll be right back right after this. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still having a conversation about how to open a business for tax purposes. So first, you need to pick a business structure. Second, you need to show that you're serious. 3, you need to demonstrate a profit motive. Now, let's get a little deep into the demonstration of the profit motive. How does the IRS determine whether your side gig or your gig is a business or a hobby? And a key feature of a business, according to the IRS, is that people do it to make a profit. And that makes sense. So people engage in a hobby for sports or recreation, not to make a profit. So there are 9 factors that the IRS uses when determining whether an activity is a hobby. And I want you to really pay attention, even take some notes if possible. Make sure to base the determination on all the facts and circumstances. But if you have more questions, you want to know more about non-for-profit rules, not just for profit, but non-for-profit rules, you can actually go to the IRS, the website, and there is a publication number, publication 535, and this is business expenses. So in making the distinction between a hobby or a business activity, you want to take into account all facts and circumstances with respect to that particular activity. And a hobby activity is an activity not done for profit. This includes activities done mainly for sports, recreation, or pleasures. So this is the trifecta that the IRS pays attention to when categorizing an activity as a hobby: sports, recreation, or pleasure. And no one factor alone is decisive. You must generally consider these factors in determining whether an activity is a business engaged in making a profit. So there are 9. We're going to put this on the screen. So whether you carry on the activity in a business-like manner and maintain complete and accurate books and records, whether you have a personal motives in carrying on the activity, whether the time and effort you put into the activity indicate that you intend to make it profitable, whether you depend on income from the activity for your livelihood, whether your losses are due to circumstances beyond your control or are normal in the startup phase of your type of business, whether you or your advisors have the knowledge needed to carry on the activity as a successful business, whether you were successful in making a profit in similar activities in the past, whether the activity makes a profit in some years and how much profit it makes, whether you can expect to make a future profit from the appreciation of the assets used in the activity. So those are the 9 factors that the IRS looks at, and they may look at a few of them or a combination of them or all 9 of them. But yeah, those are objective factors they pay attention to determine whether or not your gig is a business or a hobby. Number 4, I want you to comply with local and federal business rules. If you want to open a business for tax purposes, or you want to actually be able to deduct your business losses on personal or business tax returns, you need to comply with all rules at the federal, county, local, state levels. And there are 2 things you need to pay attention to. You have ongoing state filing requirements. So your annual filing requirements will vary based on your business structure in the state, right? Whether you have LLC, LP, C Corp, S Corp, sole proprietorship. One thing I want to say is that even though the filing requirements may vary based on your business structure in the state, there are a few common requirements to look out for. So you have annual report or biennial statements. So most states require one or the other. Some states set the due date on the anniversary of the business formation date, and other states pick a specific date for all businesses. You need to have a statement filing fees. So these fees normally accompany the annual report or biennial statements, which can exceed $300. You have franchise tax. So some states charge franchise taxes for corporations or LLCs that operate within their border, right? The formulas vary by state. You have initial reports. Some states require initial reports and fees shortly after incorporation, and you have articles of amendment. So if you've made important changes to your company, like address, name, new shares, or membership, you need to report it with articles of amendment. So this is for ongoing state filing requirements at the state level. What about the ongoing federal filing requirements? So most businesses will not have federal requirements beyond paying federal taxes and complying with the Affordable Care Act. Make sure that you meet all federal tax obligations, including income and employer taxes. And the Affordable Care Act requires businesses with 50 or more employees to report to the IRS that they provide health coverage. So those are the two categories of filing requirements you need to pay attention to at the state level and at the federal level. Next, you really want to maintain licenses, permits, and recertification. Very critical. Let's first talk about the federal licenses and permits. So you'll need to get a federal license or permit if your business activities are regulated by a federal agency. So you want to check to see if any of your business activities are listed on the SBA's website. Very important. And then you want to check with the right federal agency to see how to apply. Requirements and fees depend on your business activity and the agency issuing the license or permit. So it's just better to reach out to the issuing agency for details on the business license cost. The documents for staying legally compliant vary based on your industry and location, and you also need to maintain any licenses, permits, or certificates your business received from your state, city, or county. Renewal requirements vary, so it's best again to check with local business licensing offices. For example, let me give you an example. Most restaurants need to regularly renew health and safety certificates, and businesses that sell regularly, let's say, there are some businesses that sell regulated items like tobacco, alcohol, or tires. Those companies might need to regularly renew their sales permits. And for professional services like plumbing or nursing, the state might require certification with a third-party board to keep your license. So so you really have to think about navigating the constellation of licenses and permits that are out there. For federal licenses, permits, and certificates, you want to check with the issuing institution to confirm renewal requirements for your business. So here is we're showing you right now on the screen a list of some common federal agencies and departments that small businesses register with. So you have the USDA, so the U.S. Department of Agriculture. You have the Alcohol and Tobacco Tax and Trade Bureau, the TTB. We have the Federal Aviation Administration. We have the Bureau of Alcohol, Tobacco, Firearms, and Explosives, the ATF. We have the U.S. Fish and Wildlife Service. We have the National Oceanic and Atmospheric Administration. And we have the Federal Communications Commission. So those are for the federal licenses and permits. Let's talk about the state licenses and permits. The licenses and permits you need from the state, county, or city will vary depending on your business activities and business location. And one thing I want to say here is that the fees will also vary. States tend to regulate a broader range of activities than the federal government. For example, business activities that are commonly regulated locally include auctions, construction and dry cleaning, farming, plumbing, restaurants, retail, and vending machines. And some licenses and permits expire after a set period of time, so you want to keep close track of when you need to renew them. It's often easier to renew than it is to apply for a new one. So you have to research your own state, county, and city regulations. And industry requirements often vary by state, so you want to visit your state's website rather to find out which permits and licenses you need. All right, folks, this was it for today's conversation. I was talking to you about how to open a business for tax purposes. In other words, how to actually open a business and potentially deduct the losses, the business losses, to offset gains in other areas of your life. And so there are 5 key steps you need to do. You need to take here. You want to pick a business structure. You want to show you're serious. You want to demonstrate a profit motive. You want to comply with local and federal business regulations. And you want to maintain licenses, permits, and recertification. Thank you so much for your attention. I really appreciate it. I will see you next time. But until then, remember, stay marvelous.